First stock is from the private banking space, and the company's name is ICICI Bank. See, I think if one looks at the business model of ICICI Bank, it is one of the most profitable private sector banks, and it has got other very profitable subsidiaries like ICICI Pru, ICICI Lombard, ICICI Securities. I would believe that this is definitely a very good plus for the company, because these businesses are now also generating a very strong kind of profit contribution to the parent. Most importantly, credit growth, post the RBI policy, I think RBI governor has mentioned that now it has crossed 14%. So obviously, when credit
Yeah.
growth grows, this benefits, most of the banks in the system. And ICICI Bank is definitely going to benefit because corporate capex has started moving up. Retail business has been doing pretty strong, and their asset quality is
Yeah.
now very less. So I think, given all the conditions of growth in the economy, I would believe that if an investor even buys at the current level and holds for the next say 12 to 15 months, a price of around 1050 is very much possible. So I think one can even use a small SIP approach if required. But definitely, this is
Okay.
a stock which can be safe and at the same time give reasonable good returns, for the investor. The next stock is basically, from the capital goods space. We like a company called Cummins India Limited, which is one of the subsidiaries of Cummins PLC US. Now, what is
Yeah.
interesting about this company is that this is a capital goods player which is virtually debt free and which enjoys technology support from its parents on a regular basis. In fact,
Right.
almost 30% of its revenue, comes from exports to the parent every year. And most importantly,
Mhm.
with new technologies like hydrogen, green energy, I think these areas would also require technologically sophisticated engines. Already Cummins is a market leader in the diesel as well as in the gas engines, and I think as time goes by, they would definitely benefit from the tailwind seen in the capital goods sector. So I think a good order book and plus a very good kind of operating metric number is expected in the next say 2 years. So here also I think despite the fact that the stock has moved up from 950 to around 1100, I would believe there are very few companies like Cummins available. So here also, over the next say 12 to 15 months, we could look at a fair value of around 1400. So this is also another
Okay.
well-established capital goods player which one can invest. The next stock from the large cap space is a company which all of us know from the automotive space. It is Mahindra and Mahindra. See, I think clearly what
Okay.
we've seen is Mahindra has demonstrated a very strong quarter one performance, and management commentary post the conference, post the Q1 numbers has been very strong. In fact, the
Yeah.
company has a very strong lineup of products. Already the XUV 700, the Mahindra Thar has a long waiting period, and Scorpio, and
Absolutely.
as all of us chat, the response has been very strong. That definitely gives a strong visibility to the top line and the profitability going forward. And most importantly, even the tractor business, the management has reiterated that over the next say 2 3 months, volume growth would again pick up in the positive tree. Here also, like ICICI Bank, the company has several profitable subsidiaries like Mahindra, Mahindra Logistics, Mahindra Auto Components. So the benefit of these subsidiaries also gets factored into the consolidated balance sheet and cash flow. So here I would believe that if the investor has a time frame of at least 12 to 15 months, we could see levels of 1450, 1500. So here, after a very long period of underperformance, I would believe there's going to be a lot of outperformance because steel prices are coming down, demand is strong on ground. So this would obviously benefit Mahindra. The next stock is a company which is one of the country's largest coffee processing companies, and the company's name is
Yeah.
CCL, is Consolidated Coffee Limited. Now, this
Yeah.
company has been in the market for the last 20 odd years, and what is special about this company is that they make customized coffee for most of their international clients. They've got more than 200 blends which they export to well-known branded players across the globe. Most importantly, recently they have introduced a very new innovative products, that is non-veg products which actually are vegetable meat products, and I think the potential is quite significant here. The company has been generating very strong revenue over the last say 2 to 3 years. In fact, enjoying almost 20 to 21% EBITDA margins, which means that there's a significant amount of pricing power for this company. The company has also strategically,
Yeah.
built up capacity in Vietnam, so that it gets a lot of tax benefits going forward. We believe that looking at the kind of consumption opportunity in the Indian market and the global market, and with coffee prices rising, this company would also benefit. So technically, I think one should look at it from a long-term perspective. Again, from the 12 to 16 to 15, 16 months, we could look at a price of around 540, 550. The next stock which we like is a logistic company, which is called Alcargo Logistics Limited. Now,
Yeah.
this company has an export and domestic model. In fact, in the European market, in the US market, they are very large multi-transport operators. And they have also acquired, commercial interest in Gati, which is basically a separate listed arm. But this business is also growing rapidly. They cater to the e-commerce business, where the numbers from Gatti on a standalone basis have also come out pretty well. What is interesting is that this company last year showed a revenue of almost 20,000 crores, bottom line of almost 923 crores. And if you look at the valuations of this company, the company enjoys a return on capital employed of almost 30%, ROE of almost 26%, and still trades at single-digit P multiple. So I think the market is still not sure whether growth could come in, but I think looking at the management credibility, the track record, and the kind of infrastructure they have, I would believe that this is one stock which would definitely do well because logistics is largely connected to the economy. If the economy grows by 7-8%, and the global economy also shows a sign of strong revival, then I think this company should do well. So our target price here over the next 12 to 15 months around 410 rupees. Again, a very strong, big player in the logistics segment. So investors could definitely look at this company from a long-term perspective.
If you like the video, do like, comment, share and subscribe.